I have read that a number of especially institutional investors, they look at rates as a substitute for fixed income securities, for example, and having in mind that the yields on fixed income are going up. How do you think that might have a significant impact on the REIT?
In practice, in theory, the movement of the REITs prices are actually inversely proportional to the movement of MGS, because they see MGS as they see REITs as a somewhat of a alternative substitute to MGS. However, you have to see in the context of the rises in MGS now. It's not actually driven by whatever the Bank Negara is doing, but it's all driven by the movement of the US Treasuries. We've been told that the reason why the US Treasuries are increasing is because they think that with the appointment of with the election of Biden, together with the appointment of Janet Yellen, who's well known for advocating a higher interest rates. So the US Treasury prices have actually shot up. Went down because of this. So therefore, the yields has gone up, which means that again the relationship between interest rates and US Treasuries are inverse as well. So whenever the interest rates goes up, the Treasuries go down, and therefore their yields go up. But the Malaysian MGS is following suit, but there is no push from Bank Negara in terms of increasing our interest rates. I doubt that I've heard informally that the Bank Negara are not looking into increasing the OPR and that in the at least in the immediate term, for fear of halting our recoveries post-vaccination in 2022 and that. So we believe this is short-term, volatile in nature, and I think the market also look at it as that as well, because when we look at our unit price, for example, we've been quite stable over the past few weeks. We've not dropped significantly from the levels that we've shown. So the market understand that.
So another thing that the market is actually talking about recently is the potential for inflation, especially monetary inflation. So I understand that the step-up increase in rental is 2%, the standard one, and then it's also attached to the revaluation of the properties every 3 years. But having in mind that there's the potential for inflation to spike up suddenly and then subside eventually, is there any opportunity for you to amend the rentals of the properties in case where inflation runs significantly higher than the regular rate of a couple of percent or a little bit more?
We don't see the inflationary pressures in terms of affecting our yields, because like you said, our returns are coming from somewhat automatic renewals, automatic increases in our rates of 2% every year. But there's also, if you look at our property prices, it has been increasing over the years. So I think in that case, we are not too worried about the inflationary pressures affecting us.